like in today's marketplace, you got to be wise. You got to really understand your numbers. If you're going to get into real estate investing, not speculating, you got to know your ins, your outs, have multiple exit strategies, know your existing cap rate, knows your exit cap rate, know your cash on cash returns, and work with a pro like yourself, Aaron. Like I would invite the audience, if they have a W-2 job, is find a great mentor, a great coach.
All right, ladies and gentlemen, welcome to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, and we are here today with a special guest, Joe Mendoza. Say hi, Joe.
What's up? Good morning.
All right, he's on a beach. He's got his cocktail there. He's living his best life. Joe, is that a real beach behind you?
I wish it were, but no, it's not.
One day, my friend, one day. So, Joe Mendoza, what do you do?
All right, great. I appreciate the opportunity to be on your show and meet your guests here. I'm a real estate broker, investor, also coach. Okay, so I wear multiple hats. I'm very, very passionate about giving back. So for whoever's watching the show, I wrote a couple books recently. One's on mindset, one's about investing in real estate. I've been a coach for roughly about 10 years professionally. So people pay me for my words of wisdom, my experience, to call them out on their BS. I do invest. I've been investing since almost 20 years now. I could share the first go around, Aaron. I wanted to think I was an investor, but I truly was not. I was more a speculator. I got very, very lucky with the appreciation of the California market. I made millions of dollars, just speculating.
Right.
And here we are today. I'm still in the game. I never left. I had to change my ways, and here we are.
Yeah. It's funny. I feel like some of my first investments, I almost got like saved by the market as well. If the market did drop out at that time, although I started investing in 2012, which was a great time to start, probably the best time to start investing, so I have a number of holdings that I bought around then that, I probably didn't. I still got for great prices. I just maintain them over time, buying the right area, and they just go up. They're very forgiving real estate, in the right areas there. But so you got started 20 years ago investing in California. Must have been a very different market back then. What did you get started? What type of real estate?
Very much so. So I started with single family, and one of my first homes ever. Check this out, Aaron. I bought for $205,000. It was a 5-bedroom, and leaving my mom and dad's house into this property, I was a little nervous, taking on this, couple $1,000 payment. And when I sold it about 2 years later, I sold it for about $270,000. I thought I hit the jackpot. But as you may remember or not, you or the audience, that property kept going. It went all the way up to almost 600,000+ at the peak of the market. And I look back on it like, oh my God, why did I sell it? But I started in single family, and that was one of many stories where, the price tags got bigger and bigger and bigger. I bought a property in downtown San Diego. It was on the 31st floor. I bought it for $450,000. I waited 2 years because it was just dirt. And so I put my deposit in there, waited 2 years to finally have it completely finished. Right. By the time it was finished, I literally closed escrow, threw it on the market, threw it on MLS, and I was able to get a buyer for $650,000. So I made over $200,000, not even owning or moving into that property. And again, it was speculating. The timing was right. There was lots and lots of properties where I made, in upwards of 200,000 or more. And I was just killing it, but again, that was speculating. one of the biggest takeaways I would share, words of wisdom is don't do that. Because like in today's marketplace, you got to be wise. You got to really understand your numbers. If you're
Yeah.
going to get into real estate investing, not speculating,
Mhm.
you got to know your ins, your outs, have multiple exit strategies, know your existing cap rate, knows your exit cap rate, know your cash on cash returns, and work with a pro like yourself, Aaron. Like I would invite the audience, if they have a W-2 job, is find a great mentor, a great coach, somebody to partner up with first, or maybe forever. Because if you truly want that passive income, some people go into this thinking like they're going to get passive income, but they in fact give themselves another job
Right.
because they don't understand the game.
Yep. That's what I did. I would read the books about real estate, and I'd watch the videos. I went to some courses. They never got me to pay like the $20,000 package. I outsmarted them, but I did do like, I think a $400 like weekend course, which I get a lot from. That's the way you got to do the gurus, right? When you go to like the $400 weekend course, like that's a good bang for your buck. They actually give you a ton of information. They give you so much. You're like, oh my God, I need to buy the $25,000 course because this $400 course was such a good return on my investment. Imagine if I put 25 grand in. Unfortunately, education doesn't work like that. It's like once you learn about it, like if I learn how to flip houses, it's great. But then like if I go learn every other spectrum of real estate, that doesn't mean I'm gonna make money doing it. But no, that's exactly, I started as well with buying real estate, thinking it would be a passive cash flow check for me. I bought my first income property was a 5-unit, and I had flipped some houses. I was, selling a bunch of houses as a realtor, developing a team, working my butt off. And I was like, man, I want passive income. I want to sit back in a lawn chair and let the money come to me. So I bought a 5-unit and leased the entire building up to temporary rental assistant TRA tenants that had 6-month leases, but paid top dollar. It all got paid up front. So I'm living high. I got the unit leased out, and then the 6 months comes, and none of the tenants were able to, properly renew the lease and pay their rent on their own. I ended up having to evict the majority of the building. Figured out, how to prep tenants properly, how to work with the right tenants, how to manage the building the right way, and over time developed my own management company after hiring and firing a few of them. So boy, that was a lot of work though, collecting that rent, managing that building. It was far, far from passive income. In fact, there's the building right there. You can see it behind me. There it is. Look at that beauty. Storefront and 5 apartments above it. And I figured out from that experience, I said, there's a gap between what the talking heads are saying and what reality is. It's not passive income. It's a full-time job. Management companies kind of stink, and you kind of need to, once you get a lot of real estate, develop your own management company to have it done the way you want it, in my opinion. But so that's what I figured out, and we developed a company to bridge that gap. I'd say over the last 10 years, as you know here, People's Capital Group. So anyway, so you got started with single family homes. You lucked out. You made millions of dollars. And what happened though when the market crashed?
Wow, great question. So let's keep going with the story. So
Yeah.
I was doing single family, then I started getting into plexes. Then you're right. Instead of making $1 million a year, Aaron, I actually, for a little embarrassment, want to say I got a little bit greedy because I wanted to make 10 million to 100 million. And so I started learning about syndications, kind of conversions, land development, raising private capital. And I started to do all that. Luckily, Aaron, I started to see the writing in the walls, and I started paying close attention. And I started like, hey, here's your money back. And so I was responsible to give people's monies back. Meanwhile, I was trying to really salvage my portfolio because, man, one person stopped paying me rent, then another person stopped paying me, and another one. And then all of a sudden I had 5 doors that I had to pay. And I was unfortunately a little overly optimistic at the time, where I had a pretty liquid bank account where I said, hey, you know what? I'm going to sustain. I'll be all right. I'm going to go ahead and work it through.
Mhm.
You know, these few months turned into a few years.
Mhm.
And, you know, meanwhile, my savings was getting very, very depleted.
Mhm.
I was getting rid of property, sometimes not by choice. And
Mhm.
so, like, I went through a very humbling experience
Mhm.
and pretty much had to start all over.
Mhm.
And so I did, you know, and luckily my wife's a rock. My kids are very solid and
Mhm.
they stayed by my side. They were like, you know what, who cares?
Mhm.
It's just all material stuff. And I had to start over roughly around 2014. And
Mhm.
so I literally had to start all over,
Mhm.
started to regroup and had to work on my mindset. And so that was a big part of my success. And a lot of the nuggets I share in this book, how I had to pull myself out of that, lack of a better word, crap hole, because I was
Sure.
depressed.
Yeah.
I was, I had some crazy thoughts, and I also shared it in that book. So
Mhm.
I know there's people probably listening to this that are probably even going through that adversity. What I would say to them is
Mhm.
keep the faith, keep
Mhm.
the faith, you know, garbage in, garbage out. You know,
Mhm.
you got to consume good stuff to reprogram, right? And then start surrounding yourself with great people. And so I started to rebuild my portfolio, you know, start the slow and steady and very, very cautious way and
Right.
started accumulating single family property again. I got into some passive investments, some
Mhm.
REITs, some syndications. I even started investing in some business and some stock because I understood the stock market and I made some pretty good money there. And right now, doing all right. I can't complain. You know, there's a target mark I think for everybody where
Right.
you want to hit that number. So it could be on the beach, and you know, I'm building up towards that number. And I also want to share with the audience, Aaron. You know, a lot of these folks don't begin with the end in mind. You
Mhm.
know, you got to ask yourself, what is my end goal? Because
Right.
you're going to keep going and keep going and keep going.
Right.
And if you're going through this journey and you're dissatisfied, there's a
Mhm.
certain reason for that because you got
Mhm.
to ask yourself that most powerful question.
Mhm.
When's enough enough?
Yeah.
When's enough enough? Is it
Mhm.
100 doors? Is it 1,000 doors? Is it 10,000 doors? You know, you
Yeah.
start playing this game, and some people think that, hey, having millions of dollars, I'm going to be happy. Well,
Right.
that's
Right.
immaterial, and
Yeah.
it might lead to depression and
Mhm.
unfulfillment. So, what
Mhm.
gets you fulfilled is very, very important part of that equation.
Oh, absolutely. I mean, that's what I work with high net worth individuals all the time. And I meet lots of different walks of life in the fundraising industry and the syndication space, as you know. And I got to say, money and happiness are really not all that correlated. In fact, some of the most successful, wealthy people I've met that I really idolized at first, not all of them, a lot of them have fantastic lives, but I did recognize that one person in particular years ago who I always thought, kind of a mentor of mine, when you really got to figure out how often he spends time with his family, how often, to go on vacation, right? I remember one day we were working together on something and he's like, yeah, I haven't ate food since 8 o'clock this morning. And it was like 8 o'clock at night. And I'm like, man, you got to take care of yourself, like, and I find myself as an entrepreneur doing the same thing, skipping meals, skipping vacations. This August, I was going to go on a vacation with my wife. We usually like to take 1 or 2 weeks off. We actually travel to baseball parks, Major League Baseball parks. We've been to like 15 or 16 Major League Baseball parks, and it's a great way to see a city. So we go on these awesome road trips, and it's a lot of fun. And we didn't get to do that this year with the corona going on. I just say, you know what, let me stick around. Let me focus on building my business and just making sure there's no fires to put out. And and that's, there's always going to be a fire to put out. There's always going to be another challenge. There's always going to be a thing to fix on the website. So you have to make your hours. Say, hey, wait a minute. I have to take care of myself. I have to feed myself. I have to see my family, see my friends. Tomorrow I'm taking a Saturday off. I'm going dirt biking with my buddies in Eastern PA. We got like a group of like 8 or 6 of us and ATVs and dirt bikes. And that's my fun time. That's what I like to do. And been
Nice.
doing that since I was a kid, so you got to have those days. And I think people in our line of business, we strive so much for wealth and success, and it is based on numbers. In America here, we have this culture where that's a keeping up with the Joneses, and And I get sometimes into that space a little too much, like that guru self-help space. And you have to be careful and recognize that, hey, what works for this guy might not work for you. Find that medium where your mentality is you're happy going into the office. You wake up, you're looking forward to the day. I remember when I was an agent and I hadn't figured out yet how to do 40 transactions a year without wanting to kill myself. I mean, it was really hard. I'm working 7 days a week. My phone's ringing at 10 o'clock at night. You're only as good as your last deal. I was hiring agents who sat around the office and didn't sell real estate while I paid for their desk fees. And, I was hiring the wrong assistants who couldn't follow directions. I was screwing up. I was learning how to build my business and working way too hard. I said, wait a minute, I need to find out how to go. What was my goal originally? Oh yeah, passive income. And here at PCG, we have it written on the board. What's our goal? And our goal is 65 million in ownership over the next 4 to 5 years. And maybe we'll get to 55, oh shoot, maybe we'll get to 75, who knows, but it's a goal. It's on the board. We're getting there one brick at a time. And it's so important to have that end goal in mind. But I got to say, my real end goal is to not have to work 7 days a week and never be one of those successful people that never sees their family, because that is not success to me.
I totally agree. I mean, you got to work hard, you got to play hard, and you got to have that fine balance in between, because I've met some very, very, very successful people who were very unhealthy. And I believe health is wealth, because why have that all that money and you could barely even walk?
Right.
You have all these health issues and ulcers and what have you. What's the point?
Yeah, no, exactly. And I'm guilty of that myself. I do this thing where, right, I just work so hard, don't eat through the day, and then I just crash, at 6, 7 o'clock, and you end up, and then you're, eating a bag of candy on the couch till 10 o'clock, so, and it's like, oh, I used to have an exercise routine, but I really want to answer this email. I really want to get that loan application in. It's just, I can't do my exercise until I do that. And now it's 9:30 and now the phone's ringing, forget exercising, so I'm definitely, guilty of that. In fact, I made a rule myself this winter. I want to ski 3 days a week. That doesn't mean a whole day of skiing. That means I'm going to wake up, start answering emails at 7:30 to 9, go do 2 hours on the slopes, and then, get back to work. I'm going to live 10 minutes from a ski mountain, so I can do that. And that's been a dream of mine, a goal my whole life, to actually have a manageable schedule where I'm not just working 12, 14-hour days, because I've been doing that for years and I love what I do. I have such passion for it. But I got to say, you get to a point where you recognize, now, I'm starting to burn out.
Right. And unfortunately that happened to me a couple of times in my career where, like, you go burn the candles at both ends and you're not managing your health. I literally got burnt out where I was drinking 7 cups of coffee a day and still not feeling good, whatever. So I had to hit the reset button, go through some cleansing, and literally, like, physically burnt out. And so that was a lesson learned for me that, hey, you got to have that fine balance. Another example I could share with you, Aaron, is I have a client that's very, very successful. And when I took her on, she was actually depressed, making multiple 6-figure income. I knew there was a void in her life. And I said, hey, you know what did you used to do as a child? What did you like doing? And her thing was riding horses, having a horse. I go, you know what, let's set some goals. I mean, she could easily have bought a horse right there. But I go, no, let's tie it into your production and let's tie it into this. And she ended up getting that horse. She lives a very fulfilled life. She competes riding her horses. And check this out, Aaron, her business exploded even more because she brought that void in her life back. And she's having the time of her life. And so now her next goal, I go, hey, you talked about let's get a stable of horses. Let's work on that. And so, it's one of these things where you kind of gamify it a little bit, where like you got to have that happy medium of like, hey, what are you passionate about?
Yeah, no, absolutely. Absolutely. I'm the same way. I look back, what made me happy as a child, and it was usually skiing or, dirt biking, and which I try to get plenty of both. But And that's, my horse would be, a motorcycle or something like that. So a few more horsepower, but about the same thing. And
With like 400 horses, right?
well, not that, I wouldn't get that, but yeah, probably like 120 horsepower. But
There we go.
yeah, you don't want to kill yourself. You gotta, take it easy. But,
We'll work our way up.
oh my gosh. Yeah. But exactly, man, you have to have those goals. And I find that when I am mentally, ready to go for the day, well fed, well exercised, had a full 7 hours of sleep, then I am able to really just perform on that peak level that I know I'm capable of as an entrepreneur. And once you're performing on that level and your business is booming, and then times change and you kind of relapse maybe from that way, and you're not performing at that level, you do notice it. I know in March and April, I had just raised $1 million. I was about to close on a $3 million building, which we're actually now closing on come Monday. So very exciting time, but it was tough because the coronas came. We had to put everything on pause. I just like you, send back investors money, say, you know what, we're actually not going to buy this right now because we don't know what the hell is going on. In March, it was like, what is going on? I think the world's ending. No, it's not. The media is telling me it is, but they're always wrong anyway. So basically, we went ahead and sent back the funds, put the deal on pause. Very stressful time. Our business soldiered through. We did fine. We have good investments. We have a good management company, but boy, that was a scary time. And it's just my mental health is so related to your business. I couldn't believe when my business was struggling, not really because of anything we did. It was a macroeconomic situation. I think we handled it fine and came out even stronger. But holy mackerel, was my emotional system just nailed. Like, man, it's hard to get out of bed when your business is struggling through something you can't really control. I think I was depressed for a few weeks. And it's tough.
Yeah, like I said, I've been there, done that in 2007 to 2009. I mean, I literally hit that rock bottom where it was really hard to bounce back. And, I really had to do some things, I would call them like Hal Elrod talks about the miracle morning, or start to create those non-negotiables in life, and say some prayers. I mean, if you're spiritual, whatever, this is a day that the Lord has made. Let us be grateful and be glad, right? Start to say these different prayers or affirmations and pull yourself out of it. If you're going through this coronavirus pandemic and you're getting furloughed and what have you, there's another world out there where you could reinvent yourself. And real estate, I got to say, is one of those golden opportunities where, like, man, you could really start to control and shape your destiny. Just partner up with the right people, read a lot of great books. You don't have to buy those boot camps, like you said. I mean, there's a lot of education on in books and YouTube videos and podcasts. But the most important ingredient, take massive action.
Yeah, and I 100% agree. And also, faith is so important. I do have faith. My wife as well. She's really instilled that in me. She's very spiritual herself, and every morning she puts on a pastor we like to watch, or we have a couple different guys on YouTube we like, and it's really nice, because I wouldn't have put that on. I would probably put on some stupid political talking head or something that really pisses you off, right? Because that's all that YouTube stuff is, just to get you riled up, get you to click on it. So she's great like that. And we start with, some spirituality in the morning, just being grateful, recognizing that, holy mackerel, the year has been a year of change and growth for everyone. But my wife got furloughed in March. We moved up to Vermont to enjoy our properties up here just for a couple of weeks to kind of get away with everything going on. And then we recognized that, holy mackerel, the short-term rental market up here is just lighting up right now in June. And so we actually built out her infrastructure and her hospitality management business there, and opened up, People's Capital Group's infrastructure to buying properties up there some more. And so it's been a complete change, which, 6 months ago, if you told me I'd be living in Vermont, spearheading the next chapter of PCG, I'd be like, I wish, but I can't do that because I live in an apartment in New Jersey. Like, I could never make that change. And we're like, no, why? Why can't you make that change? figure out, and things really fell into place nicely. You know, and obviously we're not investing up there because I like to ski. We're investing up there because the numbers make sense and the market took off, and we're like, this is a great thing. We better jump in on this. So it's really been a nice blessing overall. And I got to say, we've come out of this stronger, you know?
Nice, nice.
Yeah.
Yeah, where there's adversity, there's opportunity,
Mm-hmm.
and you just got to look at those opportunities, investing in passive real estate. What's going wrong with this property, and how could I do a value add to like create forced appreciation or increase the NOI? I mean, you got to look at those properties from that angle, and the opportunities will be created, not so much you'll try to find them, create them.
Right.
Yeah.
Right. People always say, how do you guys find these deals? We say good deals aren't found, they're created. Absolutely.
I agree.
It's all about negotiation, my friend. It's all about negotiation. I was at a property the other day. I was like, this deal doesn't make sense. And then he's like, well, I own it outright. I was like, let's talk about seller financing, which you don't want to call it seller financing. If you're talking, you want to say, let's talk about ways we can help you pay less taxes on this transaction, right?
That's right.
Because seller financing, it sounds like a favor. A seller's doing you a favor, right?
Yeah,
but
it's kind of crazy it's kind of crazy how some of the brokers out there, commercial brokers, sometimes still don't understand what that is.
Right. Oh yeah. I love the brokers that tell me it's illegal to wholesale, or or tell me, but send me a deal that hey, you could buy this for 300,000, put 100 into it and sell it for 400. It's a great deal. And I'm like, I don't think you understand what a deal is. That's all right. Let's not. We were allowed to knock realtors because we're realtors, but we
That's
should.
Right. That's right. We are realtors.
Asterisks. We love realtors and brokers. They make the world go round. Okay. We love them. We love you. All right, Joe. Well, how can people learn more about you and get their hands on this book? You have a couple books here.
Yes, I have a couple books. So those watching on YouTube or video, what have you, Make It a Comeback is, again, about mindset. If you're having some challenges or you want some secret hacks, I mean, I've invested probably over 300,000 with mentors and coaches and training and masterminds, what have you. I shared a lot of those nuggets there. Flex with a Plex. I've been a realtor a long time, and I talk about like how to make it as a realtor, how to make it as an investor. So it's a little bit of a blend of my personal story. You could find both on Amazon. Best way to reach out and get a hold of me, just go to joemendoza.com with a Z. And I give a lot of tips, some hacks, some nuggets in there. And if you want to reach out to me personally, you could reach through me via that method. And I'm all over social media, Instagram. I have my own podcast as well that Aaron was on the show as well, the Real Estate Raw Show. So find me there as well. Thank you.
Awesome, Joe. Awesome. Looking forward to seeing that episode with us. That'll be great. And this will be out shortly as well. Thank you so much for joining us, Joe, here. It's great to get to talk to you again here. And of course, for our listeners, my name is Aaron Fragnito. I'm the host of the Passive Cash Flow Podcast, which is hosted by People's Capital Group here, sponsored by People's Capital Group, where we work with passive investors to buy apartment buildings in North Jersey and short-term rentals in Southern Vermont. And the investors get to enjoy all the benefits of real estate without doing the heavy lifting day to day, which Joe and I just explained how it can actually drive you to depression. So I think we defined how hard it can be to be a real estate operator. And if you don't have your ducks in a row and your systems in place personally as well, then it's just going to be, it can be a tough business for you. So I think we gave some good nuggets of advice here. Thanks a lot, Joe, for joining us. And to our listeners, if you want to learn more about People's Capital Group, you can go to peoplescapitalgroup.com as well. And stick around for another episode every 2 weeks now. We have an episode of the Passive Cash Flow Podcast. Thanks a lot.